global markets have been extremely supportive, and that has definitely helped the cause of Indian capital markets. While we had significant positive domestic clues, the international market has turned very supportive over the last few days, post US Fed cutting the rates by 50 basis points. We understand that global investors are turning risk on board, and this will definitely help an emerging market like India, which is going to attract significant amount of FII flows in the near future. What has been happening over the last few months was that domestic money was keeping the markets buoyant, whereas FIIs were definitely on the sidelines. Now, with US interest rates coming down, it is expected that they will also start putting in money in a big way. Of course, the valuation concerns was kind of holding back the FIIs. However, there are pockets where this definitely will attract money. We have been seeing the initial signs of that, with large caps going up in a manner which clearly indicates the FIIs are back. As far as India is concerned, it is a Goldilocks scenario, with foreign money coming in, domestic flows remaining strong, and economic factors, including the global oil prices, remaining range-bound and favorable for India. We believe that market will continue to retain its positive bias and keep inching upwards. We will keep hitting newer highs, and the markets will continue to be favoring the large caps over mid cap and small cap at this stage, on the back of FII buying and large institutional buying. We continue to believe that domestic focused companies, particularly the ones having significant rural presence, will do well in the near future. So two-wheeler companies, FMCG, consumer durable companies, in spite of the valuation being rich, will continue to perform well. The other space which we are confident about is the BFSI. With interest rates coming down globally and also expected to come down in India, I think BFSI will have a long run. Under the current circumstances, the BFSI pack is definitely undervalued. Most of the NBFCs are quoting at historic low multiples. And when one compares this with the market overall, definitely BFSI looks poised for a up move. Under the circumstances, gold loan companies, housing finance companies, and select banks can definitely be looked at. As far as large banks are concerned, deposit mobilization continues to remain the key, and we favor large private sector banks like an HDFC, IDFC First Bank for buying for long term. Amongst two-wheeler companies, we like Hero MotoCorp, considering its significant presence in rural India and the valuation gap it has with its peers. Amongst FMCG companies, we like Dabur, considering its rural presence. Overall, our view on the market continues to remain positive. Thank you.